Last week was nothing short of spectacular as we rode the bullish momentum by capitalizing on the weakening US dollar to secure over 1,000 pips in profits from multiple buy entries. If you missed out on this daily commentary, don't worry, you can catch up using the link provided in the description box below or at the top right hand corner if you are watching on my YouTube channel. Now I'm thrilled to welcome you to another insightful edition of our weekend series dedicated to price action based technical analysis. I'm Sheriff Daramola, and in today's video we are going to take a closer look at the XAUUSD chart. The recent surge to new all-time high for gold is certainly noteworthy, driven by factors such as a downbeat US jobless rate, dovish commentary from the Federal Reserve Chair, and geopolitical tensions in the Middle East all have played a part in this remarkable surge. However, it's important to consider whether there might be too much optimism regarding interest rates in the gold market, potentially leading to an exaggerated rise in price. Therefore, we must be wary of potential corrections in the days or weeks ahead, which could be as a result of profit-taking activities. As always, we will be dissecting the current market structure from both technical and fundamental perspective, utilizing our basic tools such as the economic calendar, trend lines, key levels, and chart patterns to decipher potential price movements in the coming week. Before we proceed, it's important to reiterate that this video is intended for educational purposes only and should not be considered as financial advice. While our aim is to enhance your understanding of price action analysis, it's crucial to acknowledge the inherent risk associated with Forex trading. Exercise caution and consider seeking guidance from a qualified financial advisor before making any investment decisions. With the groundwork laid, let's now dive into the detailed analysis. So as usual, our first point of contact today will be on the daily time frame, where I have taken into consideration the nature of price action since the month of August of last year. So that's an historical data of about 7 to 8 months thereabout. And if you look at the structure closely, you will see that during the last 7 to 8 months, price action had consistently found higher highs and higher lows, giving us a situation that looks more like an ascending channel. And when we connected the series of higher highs here, we have the resistant line of that ascending channel. And then when we connected the series of higher lows, we have the support line of the ascending channel. And of course, you know how we treat our ascending channels. When price remains within that structure, the outlook in the market still remains bullish. Hence, we will be using that structure to guide our trading decisions going forward. Now, besides the ascending channel are a couple of levels, which for those of you who were with me during last week's analysis, remember we had our last week's key level at the $2,080 level, which served as a platform for that bullish momentum we capitalized on as we rode it all the way into the $2,195 level. Once again, congratulations to everyone who took advantage of this opportunity. Now, going into the new week, we have a new key level that we will be using, which is exactly at the $2,143.50 level. And as you will see that in the month of November/December last year, this level served as a strong selling niche, as you will see here. And not until last week that we saw price breakout of that structure. Now, going into the new week, the appropriate question is this breakout going to turn out to be a false one or a valid one? Are we going to see price come back to retest the structure in an attempt to continue the uptrend, or are there chances that price will break down the structure in an attempt to respect the ascending channel to probably hit the support line of that channel? So you can see how crucial the $2,143.50 level is going to be for us. And as a result of this, I was able to build a trading setup around this level, hereby giving us valuable information to strategically position ourselves for the next move. Now, this structure was identified on the 4 hours time frame. But before we go into the details, it's important that we keep tabs with the fundamental factors that will be affecting the sentiment in the market this coming week. By monitoring the economic calendar, we aim to pinpoint potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information and timing to position ourselves for the next move. So right here on the economic calendar, we will be focusing on high impactful event from the United States economic docket. And the first event we are going to be looking at for this week is coming in on Tuesday, March 12th, and that is the Consumer Price Index. Well, this is a measure that examines the average change in prices paid by consumers for goods and services over time. A higher than expected CPI can lead to concerns about inflation, impacting market sentiment, as it may prompt expectations of tighter monetary policy to control rising prices. So this is one event everyone will be looking forward to gauge the inflationary pressure of the United States economy. On Thursday, March 14th, we are going to be looking at the Producer Price Index, which measures the average change over time in the selling price received by domestic producers, excluding the volatile foods and energy sectors, of course. A higher than expected reading suggests potential inflationary pressure, which will of course impact the market sentiment by signaling changes in production costs and potential effect on consumer prices. On that same day, we will be looking at the retail sales data, another key economic indicator that measures the total receipts of retail stores, representing consumer spending in the economy. So it's another impactful event that provides insight into the health of the US economy and consumer confidence, hereby influencing expectations about future economic growth. Now, lastly, on Friday, March 15th, we will be looking at the publication of the Consumer Sentiment Index from the University of Michigan. And their data gauges the prevailing sentiment and confidence level among consumers, hereby providing us with valuable insight into potential shift in economic conditions. So these are the high impactful event we're looking forward to this week, and we all understand that the anticipation of this event has a way of influencing the behavioral patterns in the market, and of course this will reflect on the chart as price action. Now, talking about price action, let's scale down into the 4 hours time frame, where I did take into consideration the nature of price action since the mid-month of January. Now, if you look at the structure closely, we can see another ascending channel, as you will see price action at consistently respected this area. Look at what we have here. Then we saw this move all the way down. Then it continued the consolidation phase, higher highs and higher lows, leading price back into that resistant line of that ascending channel one more time. So as it is right now, after connecting the series of higher highs, we have the resistant line of this particular ascending channel. and then when we connected the series of higher lows, we have the support line of the ascending channel. Now zooming into what has happened in the last couple of weeks, you will see that price action has found a found a barrier around the $2,180 level. And as you will see, every attempt by buyers to break out and settle above the structure has been met with strong resistance from the sellers, giving us a potential profit-taking activity ahead of the new week. So to guide our trading decisions for this week, we are going to be using these key levels. Remember the 2001 for the $3.50 level, which is right here, and the highest point where price action closed last week at the 2,180. Now, if you look at the distance between the resistant line of that ascending channel right here and the support line of the ascending channel around the $2,080 level, remember that was our previous weekly key level, we have close to 1,000 pips to catch there. So if any form of profit taking activity is going to happen this week, that is if we see continued selling pressure or any form of reversal pattern below the 2,180 leading to the breakdown of this key level, this could lead to about 1,000 pips of trading activities on that selling opportunity. So we'll look forward to see how the market is going to be reacting to this level around the 2,180, and if it drops into our key level for this week at the $2,143.50 level, we shall see how it will react to that structure to maybe join the bearish momentum to the downside. And in fact, if we can see a reversal setup around this area, it could incite an uptrend move. And if the opposite situation happens here, that is, instead of price finding selling pressure below the 2,180, it breaks out of the structure, then we will be in for more opportunities to buy this asset. So it's a simple trading setup we have here on the XAUUSD for the new week. So trust me, I will be with you in the comment section of all of my public platforms to give you update after monitoring how market participants will be reacting to this current structure during the early hours of the new week. If you have found this content helpful and useful in making your independent trading decisions on the XAUUSD, I would really appreciate your support by giving the video a thumbs up. Your likes are valuable to me and helps the algorithm promote the video to a wider audience of traders who may find the material beneficial. Thank you in advance for doing so, and if you haven't already, I encourage you to follow me on this channel for more of this content. By subscribing, you'll always stay updated with the latest ideas I share and receive notifications whenever I upload new videos and commentaries. See you all in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye.